Okay, so based on available evidence, is trend following anything other than glorified technical analysis used to justify market timing? Has it been proven to have ex ante returns beyond a buy and hold strategy that survives transaction costs and expenses? And then he's added here, and will you have Meb Faber on the podcast, who, of course, is a proponent of that trend following strategy? So,
Yep. Yeah,
all right.
Meb's got a proponent of a few interesting strategies, but yes, this is one of them. Meb's welcome on this podcast anytime. I like Meb. He's got a good podcast as
Yeah,
well.
super smart guy and has written a lot of really good work. So
Totally. Yeah, lots of respect for Meb. He can come on whenever he wants. Just let me know. Now this is a topic that I'm not super comfortable being kind of the arbiter of truth on. I think I've said before, I don't have a really strong opinion on it. There are two papers in the Journal of Financial Economics. There's a 2012 paper titled Time Series Momentum and a 2020 paper titled Time Series Momentum. Is it there? And those two papers in like the top journal or one of the top journals in financial economics that are taking opposing positions on the statistical reliability of the evidence supporting simple time series momentum. So I'm not going to be the guy that says who's right there. I think the law of financial economics research applies, where for every PhD, there's an equal and opposite PhD, which is one of the reasons I think the term evidence-based investing is silly, because whatever evidence you have, I can find some opposing evidence.
yep.
We do not use time series momentum products at PWL. Looking at the live performance of many of them, this seems to have been perfectly fine so far. I'm not saying there's anything wrong with these products necessarily, and it's possible that they can play a role in diversified portfolios. I have seen some research showing using simulation data how they can fit into retirement portfolios, for example. And maybe we just haven't seen the type of environment where these products can shine yet with live performance. But I looked at a few that are out there, a couple that are just really simple, so it kind of makes it easy to illustrate the point. But there's the Pacer Trend Pilot US Large Cap ETF, which is getting in and out of stocks based on trend following rules. It's trailed the S&P 500 since inception in 2015 by 5 percentage points annualized. The Pacer Trend Pilot International ETF has trailed its underlying index by around 4 percentage points annualized since its inception in 2019. And so these are designed to participate in the market when it's trending up and then pare back exposure during short-term market downtrends and prevent extended declines by moving to T-bills during long-term market downtrends. Now, they have been successful at reducing downside. Like if you look at their kind of returns chart, they're really interesting charts actually, because you'll see the decline of the underlying equity index, and the trend following one will kind of stop, and then it's flat for a bit, and then the equity index recovers, and the trend following one eventually starts participating in stocks again. But the overall result has not been great, unless you really value those specific payoffs. I mean, I guess it's kind of like structured products. Like if you really care about, I don't know, like doing exactly this thing, and maybe I guess if you believe the evidence is strong enough that it'll add value to your situation. But it seems like a pretty rough trade-off, at least in isolation. And I think somebody who's a proponent of these would say, well, you shouldn't just compare it to stocks. Should compare it maybe to a stock bond portfolio that has similar volatility or similar downside risk. Okay, fine. Or they might say that it belongs in a portfolio alongside equities to tailor it to your overall preferences. Fine. But I think like any product, you have to have a lot of conviction in what you're doing. You have to understand the range of potential outcomes, and you've got to have an overarching philosophy to fall back on when things are not working as expected. I to me, this just conceptually, like in terms of an investment philosophy, I don't find these products compelling. I know some people do, and some very very smart people have created products that implement these ideas, and that's great. And if people want to use them, that's fine. But it's not something that I think we'll be touching at PWL anytime soon.
You know, it's funny because these last two questions I think kind of dovetail, right? They're both based on the idea that you can achieve the returns of the market without accepting the risks of the market, right? There's always some kind of, you get the upside, but you don't get the downside. And look, we would all love for that to be a thing, but I think part of becoming a mature investor is let going of the idea that you can get that, right? I mean, if you want higher returns we always joke diversification is the only true free lunch, but even that is just on the margins, right? It's like a kind of misunderstood quote, but the idea is, for the most part, if you want outsized returns, you got to take outside risk. And if you want to limit your losses, then you have to take less risk. There's no magic formula, whether it's some kind of structured product or what's essentially a market timing strategy that will allow you to avoid that. So just like accept it and move on.
Yeah, it's pretty much it. There's no magic formula or a silver bullet, but there are different ways that you can transform risk, and this, if you find a way that makes more sense for you, then that's fine. But I
As
think
long
we
as your
have
expectations are in order. That's all I
yeah,
mean,
that's
right?
right.
Yeah.
Yeah, I think we generally at PWL have I was going to use the word bias, but I don't know if that's the right word. Um, we have a philosophy that is rooted in simplicity, and I think that's an important part of our DNA. And so the hurdle for us to add something that's more complex, even something like dimensional, which is more complex than index funds, the hurdle is quite high. And I think, yeah, trend following is just not there for us. All right, next one. We often talk about how to best manage our income or invest our savings. If we thought about our years as 52 units and life as units, decade blocks, how do you plan on spending yours? How would you diversify your life for the maximum returns on sacrifices? So I don't think in blocks. Um, that's an interesting idea, but that doesn't process my brain very well. Blocking my life out. I guess it kind of relates to we talked to Cassie Holmes a while ago, who researches happiness, and one of the things she talked about is counting the times left. Like, how many times left do you have to walk your kids to school in your life? How many times left do you have to, I don't know, go to dinner with your parents? That's, I guess, a kind of a form of blocking. How many blocks do you have left to do those things? Anyway, I don't really think like that, but I do try to think along the lines of the PERMA model, to filter how I spend my time from day to day. So that's positive emotion. That's like feeling good while you're doing stuff. So I do try to check in with myself and make sure that I'm like, literally, am I enjoying what I'm doing right now? If I'm not enjoying it, I'll ask myself if it contributes to one of the upcoming points, one of the upcoming factors in the model. If it doesn't, I'll consider whether I should really be spending my time doing that thing. I've also got little things that I enjoy and look forward to. Like, I like having a cup of tea in the morning, which is such a small thing, but I enjoy it. Or sometimes if I take my daughter to her preschool, there's a really good coffee shop that's like, it's like a destination. People come from Ottawa to go there. So sometimes I'll go in there to get a coffee. So that's all positive emotion, feeling good about what you're doing in the moment. Um, the next one's engagement. So I want to make sure the things I'm doing are challenging, where I have enough skill to enjoy the challenge. That's like the Mihaly Csikszentmihalyi concept of flow. So like playing basketball in competitive leagues. I mentioned to you earlier, Dan, that I played last night when my lungs are still recovering from whatever respiratory thing I had going on, and that was might not have been a good idea. I was gasping for air. Um, Reading academic finance papers to find useful insights that I can write about, and then writing about them. Get engagement from that. Mountain biking on difficult single tracks. I think that's one that's a tough one to beat. So those are all kind of states of flow where time just melts away. So I try and make sure that I'm doing those things from time to time. Um, I'm usually doing one of those things at least every day. Relationships is the next thing in the PERMA model. That's like I do try to make time with friends and family. Spending time with them a priority. Being on a basketball team and playing pickup basketball, I have this kind of one group of guys that I'm connected with, and so I see them usually at least once, sometimes depending on the time of year, twice a week, and that's like awesome. Working with people at PWL is another. Like, Dan, the fact that you and I get to do this podcast and hang out and chat about this stuff is pretty incredible.
Well, I'd rather do
Meaning,
that than play basketball against you.
that's fair. That's fair. I'd rather do this than try and play guitar with you or jam. I'd be pretty incompetent there. Uh, the next factor in the PERM model is meaning. So like to me, it's important that I'm contributing to something that's greater than myself. And honestly, this podcast and the community around it goes a long way in checking that box. It's a pretty big deal personally when people leave a review or send an email saying that the podcast and my videos have changed their life. Like that's might seem like a small thing to do to write a review or send a note or whatever, but it's like it really validates that what we're doing here is useful, which matters a lot. It's kind of like the ultimate reflection of serving something larger than yourself is hearing from other people who are saying that you've changed their lives. I do some volunteer work too that contributes to meaning, and then accomplishment is the last one in the model. So I do try to do hard things. Writing a video or a podcast episode is a hard thing. Completing more of a challenging mountain bike ride that I completed the last time. There are these like really good single track rides around where I live, but they're really hard. And so I'll I don't know, I can usually complete 75% of one. If I can push it to 80 or 85%, then I'll feel really good afterwards, like without getting off the bike. Winning a basketball game is another one. Completing the CFA program was like, man, I still remember that. I was in the PWL office when I got that email that I'd passed level 3. That was a crazy feeling. That was 3 years of just grinding. Anyway, that's basically my whole life right there. So I like things that don't fit into that stuff, or if they conflict with those things, I'll just try to eliminate them or outsource them. I do go to Costco every week, which is something that like I don't love, but I bring at least 2 kids with me when we go, and it becomes a fun thing. The kids kind of love Costco. Anyway, so I don't think about blocks, but I do think about trying to do things that fit into those boxes every day and just check in with how I'm spending my time. And if it starts to go off course, then I will reevaluate.
Yeah, I think this was a good question. And it's interesting the way the listener kind of, I think he was sort of asking whether there are any parallels between kind of a financial plan and then just your larger life plan. And, use the term, how do you diversify your life? And I think, at the risk of torturing the metaphor, I mean, if you look at those things that you just mentioned, Ben, there's like 5 different elements that make a satisfying life. And like a diversified portfolio, right? You want to have all of those in your life at every given time. However, as you get older, your focus on the individual ones in that diversified mix might change, right? So you were probably a lot more focused on accomplishment when you were younger, and you still are. But when you're much older, you will probably have moved on from that and stressing more about the relationships or the positive emotion, right? So I think the point here is that if you're going to look to a financial model to provide some kind of metaphor for life, it's like get all of those important elements in there all the time. But there's a glide path as you get older, and you may emphasize one more than another, right?
That's a cool idea.
It's a good question.
Yeah. I like the glide path analogy.
Because we all do it, right? We all focus on certain things to the exclusion of others when we're younger. And then as you get a little older and wiser, you start to realize maybe I should spend, less time working and more time with my friends and family, right? And the way you structure your life made sense at the time, but it's going to evolve just like your plan and your portfolio is going to. So
now the real question is, can we get Scott Cederberg to run 1 million bootstrap simulations to find the optimal life glide path?
Be 100%, I don't know, engagement, meaning,
I don't know either.
relationships.
Yeah.
I don't know.
I don't know either.
So, no, I'm going to stick with the diversified mix, I think.
Yeah. I really like that analogy though. Glide path and I think you're right to say that accomplishment probably used to be more important, but it's shifted toward other stuff over time. That makes a lot of sense.